Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, boy, do we have a great indicator for you, and it is very powerful. It's going to show us basically what's going to happen for the rest of the year, and it's based on retail sentiment. Very good indicator. We're going to talk all about it in this video. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
You know, Bob, it's funny when you showed me this graph, and we're going to get into another chart first, but the graph we're going to get to is, I thought was extremely telling because there's just a definite pattern of like a head fake and then the actual. Anyway, I'll let you take it away here, but interesting stuff.
Yeah, now you know why herd animals get slaughtered in the wild. Because they're always going in the wrong direction.
Yeah.
But I want to do a follow-up from what we did the other day when I said everybody's into the pool. And this one thing it didn't show was what was the relationship between that positioning and stock market in the future. So if you could throw that up, Phil, I just want to show people the positioning is off the chart right now, guys. And you new bull markets don't come from this kind of positioning. At the very best scenario, you get a significant enough pullback, for a good dip buy, which I think you're in that camp, and then the slaughter comes later in the year. But at the worst case scenario, you go into a full-on bear and these bear markets are always 30% plus down markets. All right. So these aren't run-of-the-mill corrections when you get positioning like this. And we are positioned for it. And then I saw this morning. That's why I said we got to talk about this. Throw this next one up here. This shows you how they just totally have bamboozled everybody. Mm-hmm. Okay, last year when they're ripping the market, they got everybody in total fear mode and everybody's talking recession. Now when they're selling to you and leaving you as a bag holder, there's no talk of recession at all, Phil. I mean, it blows my mind how people continuously fall for the narrative. You shouldn't listen to anybody except for Trade Genius podcast.
Yeah, I mean, it's pretty wild because if you look at like 08 and 09, okay, we had a pop in recession searches and then fell back off as the market did its final push. And then all of a sudden when things really collapsed, then your recession searches surged back. And the same thing happened in 2019 and 2020. And, that was a very short-lived thing. And really, I guess you could call it a truncated recession because in reality, I think it was like 1 or 2 months long. And then Fed came in swiftly and printed $1 trillion and basically forced the economy out of a recession. But, obviously we have our after effects that we're dealing with inflation and all of that stuff. But again, it was an initial searching of recession talk and then it fell back to nothing. And then the actual dump came and, it came back in. So what do we have now? Well, we have another big spike in recession talk. And I think that's largely why we didn't really get the recession that we thought we might get. And plus Yellen, with her, with the monkeying around with the T-bills, and that's turned into leverage. And, and rates are rising on those too. So, you connect the dots there. It's not going to end well. But, now we've come all the way back down. So, I mean, history tends to repeat, especially when it comes to the retail crowd and retail sentiment. And so I think we're going to be at risk of a pullback into March. Bob, we've talked about that at length. But it's really summertime. I think we're going to see this recession search, the spike in recession search is just going to come back in. And the reason for that is because we're going to have a significant fall. It's these really sharp dramatic falls that triggers a spike in these searches. And I think if you look at what's going on with the jobs, and jobs can be a little misleading at the surface, but if you really dig down into the data, the long-term jobs numbers are not picking back up the way they should be. And like we just had Wayfair. If you look at the Wayfair numbers or the announcement announcement today. They were laying off like 1,500 people, and Ford laying off another 1,500 people because they have to scale back on their Ford Lightning production. And they're not the only companies. If you really listen and look at the smaller headlines, there's a number of that size of layoffs happening at a number of different companies. So I think without the mainstream media and the market participants really looking at it, the market's telling you that things are rolling over here.
Yeah, and we have a couple customers that are executives in large companies, and we were talking about these announced things, and they were laughing. They were basically saying that the soft layoffs are what's really happening. They just say, oh, you're not performing, and they just cut your job.
Right.
So you're getting both, and you got to be careful because remember when they have to announce these jobs, it's by law. If you lay off so many people, you have to announce them, but you can constantly be getting rid of people all along by just performance review kind of approach. And so I personally think is that we're kind of joking. It's kind of like basically whistling past the graveyard kind of joking is that I said these people aren't buying iPhones and iPads. They're not taking trips on Airbnb. These people are. I'll tell you, and if you're over 50 and you get laid off, my heart goes out to you. I don't know what people are going to do. I mean, it's going to be brutal. The adjustment in living, especially if you're renting and you don't have equity in your home. That's your last gasp, right? To sell your home, to take the equity out to live on. I mean, if you're renting, I don't know what you're going to do. It's going to be awful. But, we're going to have to tease through the data. Today's Friday. We're talking to you guys. Last of the OPEX moves here. And we should get a technical move down based on option positioning into February. And we'll see how that goes. And we'll see how good the earnings reports go, Phil. I think they've already lowered guidance down 8% for the quarter. So they could beat it. It's just amazing. I mean, how stupid are we? They drop it 8% while they raise the price of stocks. And then when everybody beats, they tell people how great things are. And they didn't realize they just cut 8% out of the cash flows of these companies. And then next thing you know, why is the market down 20% when everything's supposed to be going so well? My problem is I look at these numbers too much. I guess I should just be throwing everything to the wind like everybody else. But I think bad news is coming here.
Yeah. So, we got the timeline for that. Let's see how it progresses. Guys, let us know. I know a lot of our viewers come from a lot of different industries. Let us know what the job situation is. Are you guys seeing layoffs in your industry? We'd love to hear about it. Please post that stuff below. As always, check out our specials over at tradegenius.co. If you need help navigating these markets, come into the room with us. We'll help you out. And always, please hit like and subscribe and smash that notification bell. It really helps out the YouTube algorithm for our channel. Thanks, Bob. We'll see you guys in the next video. Take care.
Trade Genius.